Golden rules. Personal account. Number 1, debit the receiver. Number 2, credit the giver. Real account. Number 1, debit what comes in. Number 2, credit what goes out. Nominal account. Number 1, debit all expenses and losses. Number 2, credit all incomes and gains. Personal accounts. These accounts relate to individuals, firms, and institutions. Golden rule: debit the receiver, credit the giver. Real accounts. These accounts are related to tangible or intangible assets owned by a business. Tangible real accounts. Physical assets like machinery, buildings, or inventory. Intangible real accounts. Non-physical assets like goodwill, patents, or trademarks. Golden rule: debit what comes in, credit what goes out. Nominal accounts. These accounts record all income, expenses, gains, and losses of a business. Expense and loss account. For expenses and losses such as rent, wages, and depreciation. Income and gain accounts. For income and gains such as sales, commission earned, and interest received. Golden rule: debit all expenses and losses, credit all incomes and gains. Double entry bookkeeping. Double entry bookkeeping is the process of making a debit entry and a credit entry for each transaction. Debit, credit, follow a number column used for reference purposes. Ledger. A ledger is traditionally a bound book where each account appears on a separate page. Over the years, the ledger has developed into a loosely folder with separate sheets, each containing a ledger account. Recent developments have seen the introduction of a computer file divided into separate ledger accounts. Tips. The debit side of a ledger account is the side which is receiving or gaining value, and the credit side of a ledger account is the side which is giving value. It is important to ensure that every transaction is entered twice, once on a debit side and once on the credit side. When an item such as rent is both paid and received by a business, separate accounts are maintained, one for rent payable and one for rent receivable. When balancing an account, add up each side of the account and find the difference between them before drawing total lines and before writing the word balance. Only goods bought for resale are entered in the purchase account. When goods originally purchased for resale are sold, they are recorded in the sales account. The principles of double entry are applied to all records: income, expense, assets, and liabilities.